edition of Saturday Talk series by JanyuTech. Today we have Shri Abhijit Mokhariwale with us and is going to talk about the IT systems in banking. Abhijit is currently working as a principal with Orbital, Coherent Group company. He is having an overall 25 years plus experience in implementing and consulting regarding IT services in financial services sector, and his experience includes as a head of infrastructure in Coherent in the UK-based banking service startup that is Orbital. He is being into IT consulting services through Infosys to various US-based financial services institutions like Capital One, FDR, Equifax, etc. And apart from his experience and expertise in IT, he also holds a license to fly. He's an amateur pilot, we can say. So Abhijit, over to you.
Thanks for inviting me for this session. And hopefully, we'll have a session that is fruitful for you. So let me start sharing my screen. Actually, when I was in Infosys, our then CFO, MD Pai, used to joke that banking is a very simple business. All you have to do is to follow a 363 model. So the 363 model is you borrow at 3%, you lend at 6%, and then you go home at 3 o'clock. That's it. And that is how the banking has been for the past 2-3 centuries. But obviously with the changes in IT infrastructure now, which have especially, grown and accelerated over the past 20 years or so, the increase in computational power and the sheer scale of communication, the ability to communicate between various stakeholders that has come through, has disrupted banking just like any other industry. And so all banks are now looking to upgrade their infrastructure and be in step with an infrastructure, with the IT, be in step with the upgraded technologies so that, they are able to manage their business, grow their business, given all the disruption that is coming on from the IT side. So what are the big challenges that are coming through? So I say this slide, opportunities and challenges, because obviously in business, challenges are opportunities. So one of the biggest things is, of course, rapid innovation and new business models. And when I say this, one of the biggest things which has come through with the advent of things like Android is the end customer doesn't want to pay, and yet you have to make profits. So you have stakeholders, you have shareholders, you have people who have taken loans from. So you have payments going in, and yet nobody wants to pay for the services. And even then you have to maintain profitability. So how do you do that? So those are the new business models which you have to think, that you have to think about. How do you do that in banking when, there is increased competition? Everybody is out there trying to get new customers at higher and higher interest rates. And on the other hand, there are increased customers who are taking loans from you, demanding in lower and lower interest rates for you, so that your margin is shrinking and shrinking and shrinking. So how do you do that? How do you compete in a world where there's crowdsourcing, where literally you can open up a website today and almost source your funds directly from the end customers, and the bank no longer is an intermediary? So the communication, the ability for stakeholders, which are people who give money to the banks for safekeeping, and the other end, which are the people who take money from the banks for their loans, for whatever their capital requirements may be, that the ability for communicating them, for them to communicate, is reducing the need for the intermediary to be in place. And within that, then of course, then you have to figure out how do you ensure, so how do you as an intermediary stay relevant in that kind of a business model? So that is, of course, the biggest challenge which exists. The next challenge is, of course, the regulation. So, the governments in US, in Europe, and increasingly worldwide are all responding to the need for innovation in the market. So far, the banks have had, or at least till 2000 or so, the banks had complete and exclusive access to their own data. So what would happen is you would you would open your bank account and nobody else could access it, right? So the bank would give you a statement, and that's it. That there was only an exclusive relationship between the you and the bank. But the front end service which was being made available was obviously therefore at the mercy of the bank. So if a bank chose to be extremely poor in its front end, in the kind of apps that they would give on your Android or your mobile phones, the end users would be limited to that. So the banks obviously, so governments rather stepped in, and they have come out with standards which are such as open banking standards, which basically mean that banks now have to expose their data through APIs, and these are known as banking APIs, so that there are other market participants which are essentially exclusive app creators, aggregators, etc., who can then consume these services and make banking possible. So there are apps out there which allow you to, for instance, allow you to see your bank balances across multiple banks. So you would have only one app, and then you can see across multiple apps who has what kind of a balance. You then also are given an ability whereby you can switch your funds, move your funds from say one bank to a higher interest paying bank, and so on and so forth. So all of that is made possible through the exposure of these banking APIs. There are other regulations such as data protection, where you can host your data, who you can share your data, and number of such. So the regulation itself is making banking evolve into more and more sophisticated fashion. A simplest example of this is where you would have seen check clearing. So earlier, if you remember, check used to be checks. The way that the checks would work is you deposit your check to your base branch, and that would then get sent over onto your own branch, where it would get certified that yes, this person holds an account in their particular branch, and then it would clear the funds. Those funds would then move over onto the destination branch and then would get credited. What has happened now, especially after 2010, I think, in India, and in US, of course, it happened much earlier, was the CTS system. And obviously, if I'm sure the people in this group remember, our checks were all converted from non-CTS to CTS checks. So what is CTS? Basically, the government said, look, or rather in this case, RBI said that, look, the checks would get truncated. So your check goes to the source branch where it gets imaged, and it's the image that gets transmitted over onto your into your branch, whereby it is then verified for funds, and then the actual fund is the funds are settled. So this is how then the T+1 clearing of the check has actually evolved, or that's how we are able to do the T+1 clearing of the checks. Otherwise, of course, outstation checks, I'm sure a lot of the older people in this group would remember what it used to be to clear outstation checks. Next is, of course, the scale. So earlier, the number of banked people in this world is probably 20-30% or so. And what everybody has been trying to do is to push through the banking to the last possible consumer. The governments are also pushing for that, because otherwise then it's the currency, which is hard paper, which needs to be in circulation, and that has its own issues. So what you want is make banking available to the last possible person that is there. Now what that means is we are looking at 7 billion accounts in the very least, or rather 7 billion people having accounts in the very least. Obviously they would have multiple accounts, so so many extra number of accounts, and these are just accounts, and every transaction going through a bank account, right? So payment to your grocery person, payment to your chai wala, payment to everybody happens through that. So it's the sheer magnitude of transactions which then have to be catered for. So this is, of course, in the macro sense, but even in the micro sense, even if you were to think about it from a small business perspective, right? The earlier what the accounts or the bank accounts were being used for was, you, for instance, take a household, you would take a certain amount of cash to your house every month, and that cash would be used over the period of 1 month for buying your groceries, for whatever, everything. Now all of those transactions are coming online. So basically, that means that your IT infrastructure then has to take care of that kind of load. And finally, all of this has to happen in the most secure fashion. So hacking is one of the biggest issues which exists in the banking industry today. The invalid use of a bank account, the fraudulent use of the banking system, the ability of hacksters to take money out from not just from individual accounts but bank accounts as well. So you may have heard of the Bank of Bangladesh, I think, where the transactions which they are not able to match, they put in what is called a suspense account. These people siphoned off money from the suspense account to the extent of I think it was 500 million or something like that. It's a huge amount of money that they siphoned out of just the suspense account itself. So it is not just the individual accounts of people like us which are at risk, but equally the accounts of the banks themselves which are at risk. So the security part is a huge area of concern, and a matter of, it's a continuous area which requires focus from the banking space. And the reason why, even more than the other things, this is a big area is because this is a cat and mouse game. You may decide not to innovate your business model. Regulations move, but they move slowly. You may decide not to scale to whatever this. But in case of security, it's the hacking person who decides when they want to attack your system. And they will always attack your system in the newest way possible. They'll figure out some new vulnerability where you will, some way of using the software you should never have thought of. So if you look at your news today, they've figured out some way to siphon off money from accounts using Google Translate. I mean, who could have thought that you can use Google Translate to fish or to siphon off money? So security is something which unfortunately is something that you're always responding to. You don't have control over it. It's the hackers that have control over it. Moving on then. So now so how the banking industry is therefore evolving in the most macro sense to these threats is, if you look at each one of these problems, right, it's very difficult for one institution to be the best at handling all of these issues. So everything is pushing you to have very different priorities or very different business or technology thinking. This includes new business models, security, you having to face regulations, etc. So what the industry is now moving towards is this sort of movement towards what are back-end providers and what are, if you will, front-end providers. So the simplest way to think about this is in terms of railways, right? So if you look at foreign, and it is coming through in India as well, but if you look at UK, for instance, the rails, which is the tracks, right, which are what are called rails up there. So the rails are actually laid by the government, right? So that is infrastructure. Stations are laid by the government, so that is infrastructure. And the trains are operated private parties, right? So it's pretty much the same thing. So in some sense, the rails are what are your back end or your infrastructure, and your front end is where you are interacting with the end customer, which is where IRCTC is, serving you breakfast and snacks on your Vande Bharat Express, keeping the Vande Bharat Express clean, and so on and so forth. In context of banking, what is happening is the rails, the payment infrastructure, which are payment rails, and the banking infrastructure itself is actually therefore being their banks, which are the larger banks, are gradually moving towards that. So the Lloyds, the Barclays, the JP Morgan in US, Bank of America, etc., they are rapidly moving towards this kind of a structure where their infrastructure is so large, and they have such huge participation with the central clearing systems, which is Fed in the US, or the Bank of England in UK, where and they have such huge infrastructure in terms of the various clearing and the settlement mechanisms that exist, that they are the best people who can sort of focus within the industry on payment rails and the core banking infrastructure. The next set of people are actually the banking as a service providers, which is exactly where Corbital was trying to position itself. So these are people who are not providing the full-fledged banking experience, but providing a very small experience. Now, what is a full-fledged banking experience? This would include all the various kinds of deposits, for instance, on the deposit scale. So, a deposit scale, for instance, exists from a current account, which is what in India, of course, corporates can only have current accounts. A savings account, time deposits, which are your fixed deposits, etc. And then there are sweep accounts and so on and so forth. Banking as a service, for instance, would give you only a current account and nothing else. Core banking person would give you a flavor of all of this, right? It would give you an option across the board for the savings account. Similarly, all the other products, be it loans, be it mortgages, similarly, they would have, corporate banking, they would have investment banking, they would have payments as a separate entity, and so on and so forth, right? The full bouquet of services which are available would be available through the top layer, which is the payment rails and the banking infrastructure layer. The banking as a service layer would give you a very small slice of that. It'll just give you, for instance, a current account. It would give you the ability to make card payments, and it would give you the ability to, for instance, make payment on in UK, for instance, it would be something like one of their a simpler IMPS equivalent kind of a payment mechanism, and that's it. They would give you a very small slice of a banking experience. Platform banking, which is where so these are, of course, these two are, of course, the back-end providers. The front-end providers would be where you provide platform banking, right? So what is platform banking? So think of Zerodha, for instance, right? If any of you have have a trading account out there. Now, every time that you want to, sort of make a purchase from Zerodha, you need to transfer money from your bank over onto Zerodha, right? It's a separate transaction, which is a big hassle. Another case, for instance, I can give you is, this is, of course, somebody that we were in discussion with in Corbital, which was a French insurance player. So in France, when you go to a doctor, it's not just a doctor, but the doctor also has other services available in their clinic, like massages, for instance, right? These services, so some of those services are actually directly billable to the insurance, but some of these services are not, they cannot be billed to the insurance company. They have to be paid by the person, by the individual. So what this insurance company was doing is they were hoping to give an integrated banking experience. So when the person walks into their office, or the office of the doctor, which is there in their network, at the end of that person's session, they would have the consolidated set of services which the person has availed of, And they'd be able to say that, look, these are the set of services which are covered in your insurance, so that insurance would pay. And the remainder set of services, because it is directly linked to the bank account, would automatically get deducted from the linked bank account. So these kind of cases is what are platform banking. And then, of course, finally, the service aggregators. So a good example, for instance, would be things like Walnut, for instance, Square, etc. People which are, so these are all organizations which are sort of, from where you can link your multiple accounts. You can sort of talk to your friends. You have an easy mechanism to transfer money, to make payments, etc. Now you must remember that in India these things seem very trivial because now we have UPI, and so it's very easy to send money from one person to another person using UPI. But nowhere else in this world is a system like an UPI which is available, where you can make a 1 rupee transaction at zero transaction processing fee. So everywhere else, this ability to make micro payments is a very big deal. So the ability to, when you walk into a restaurant, you have 1,000 rupee which needs to be shared between bill, which needs to be shared between three friends. Everywhere else, it's a big issue. But of course, in India, because we have UPI, we'll do calculation on paper and then just share the QR code and then transfer money to each other. But in US, for instance, you use something like a Square or etc. to do these kind of things. And then, of course, these kind of people also give you the ability to view across accounts, determine what to do with your money, etc., and so on and so forth. Now, the principal consumers for now the key imperatives for these two players, which are the front end players, is, see, these are people who are focused towards acquisition of new customers. So for them, innovation is a big deal, which is innovation in terms of APIs. So when when the app opens, they want they want to be quickly able to customize that look. For instance, it should say hi Harish, not say hi Mr. Pathak, etc. Right now, this is of course a trivial thing, but they equally want, for instance, the ability for somebody to see the top 5 transactions, or if the customer wants, then the top 3 transactions. That if they are walking into a restaurant of their choice, then they should be able to see only the transactions which they had made during their last visit to this place. So things like these, right? These are all innovations, and such innovations are a priority for the front end providers because they help these providers acquire new customers. But all of them depend on the kind of APIs that come from the back-end providers, which is exactly the space where the banking as a service provider actually steps in. Because typically the infrastructure providers, much like the Indian Railways, they are very big behemoth organizations. Making changes for them, making changes to their infrastructure, to their services, etc., is a very complicated business for them. So it is easier for somebody which is providing a niche set of services, which relies on one of these infrastructure providers to create a slice of that and provide provide APIs or endpoints which can then be used by these front ends. And this can be customized to obviously at a far greater speed than the earlier guys. So for instance, in our case at Corbital, we were actually going to use Starling Bank. So for us, Starling Bank was here. They were going to be our payment provider. We were, in fact, in discussions with one of the card services who were going to provide uh, white label card services to us. So we would have only signed an agreement with them, and all the card transactions would have actually gone to the card providers. So that's where the proposition of a banking as a service comes in, because they are a far more flexible layer, so to speak, of the APIs, which then these front end people can consume.
So I have one question, Abhijit. I have not, I don't quite understand, as I said. But let's say you have so many services being provided by IT as companies, which one has to take perforce because we cannot build all of it in our in-house. So is it better? The question number one is it better to have just one, what you call, provider, or the necessity will probably be that you have two, three or more providers and combine their services to give the best to the customer? So that's question number one. The second question is whether one or three or four in a sequence, how do you build security? Because each one of them will have some gateway for hackers.
Typically, now, even within the IT space, you have segmentation of what kind of concerns that you want to address. So, a security is a niche area. The application development, and even within application development, backend versus Android, which is the front end development, are again niche areas. So uh, one way to do it, which is what the large institutions do, is to go to people like Infosys, TCS, HCL, which have the bouquet of services which are with them, and they provide all these services from within their organizations internally. Typically, larger institutions though have three vendors, so they have a primary, or at least, or probably two primary vendors, and then about three or four tertiary, or secondary vendors, and then a specialist tier, which is some specific technology which these two tiers may not have. They have tiers which have their key to decide which player to go to, and how to outsource actually depends on the scale of outsourcing that you want to do, because you want to make it, if you just start to outsource one people or two people, then the outsourcing person is also not interested to provide their skin in the game, if you will. So you want to make a reasonably large chunk of business for the other person to be interested to make their skin in the game to provide the best possible services for you. And within each one of these areas, you would have different set of vendors, especially if you start looking at the middle tier organization. So, I've talked about the likes of HCL, but if you were to even go to Pune, right, where like Baner Road itself, I think if I remember correctly, it has some thousand software companies or so. Within that, then these companies have niches. So in Corbital, for instance, we had one organization that was specifically focused on DevOps, which included security, which included this hardware, software, and then things like that. And then there were three organizations that we had, given the scale of development that we were doing, develop our front end and our backend software. Backend was with one person principally, and then the front end was with second person, and the third player was giving us some specialist kind of niche kind of skill sets. With regard to your question on the security part, again, the security is actually so it depends on what it depends on situation to situation. If you're building ground up, what you would do is put in all your infrastructure components, which are your firewalls, if you will, your entry points, and so on and so forth. And you would lay down norms of developing the software, so that the developers, as they are building functionality, are using the best possible practices to develop their software, so that there is no so there are fewer security problems out there. And then you have a quality check process wherein the security issues are actually being continuously being monitored and then being redressed. Along with that, then these specialist organizations also provide what are called red teams and blue teams. So a red team organization actually comes in behaving as a hacker, and they use all the so they are people who are plugged into the black or rather dark web essentially, and they use all the current set of techniques to try and penetrate the organization using all of them and try to create some kind of a security blueprint. The blue team is the one that actually looks up the internal things, right? Like what kind of firewalls rules that you've set up, what kind of infrastructure have you set up, how your software is interacting with databases, and so on and so forth. And then based on that, then it comes out with a set of recommendations which on what can be done as far as the security is concerned.